Good evening, everyone, and welcome aboard. It is wonderful to have your company wherever you may be in God's green garden on this day, the 5th of September. Holy mackerel! 5 days into spring here in Australia, and I've got to say the weather is pretty fluky. One day rain and 14 degrees here as a top in Tasmania, and next day 20. In fact, in one day it was 2 degrees in the morning and 25 in the afternoon. Go figure. That's the way spring happens around these parts. We are going to, as usual, do our usual gab around the globe to see exactly what opportunities might be out there for the week. And we're going to start with the big picture stuff out of New Zealand, and then we're going to do some fundamentals out of Singapore. We'll go and have a look at some data then out of the UK. We'll have a look at gold and oil, going back to my neck of the woods, well, almost. I call it the Big Island in Sydney, Australia, where we'll talk, of course, to Ainslie. Then we'll go cryptoing, and that's in Malaysia. We'll go to the USA thereafter and talk about stocks. And then, of course, it's back to me here in Tasmania for my 2 cents worth, having a look at all things technical from a currency point of view. But first up, as always, let's have a look at the big picture stuff. And NFP on Friday, or it's not NFP anymore, it's NFP something or other. But I'm sure it'll take a long time to get NFP out.
It was rubbish anyway. It doesn't matter what they're calling it. You can rebrand it. That's a brilliant way. Classic American technique. Let's call it something different because it's not what we want it to be.
Well, indeed. And look, I think I've said that for 2 years. We all used to sit up. Well, that's not quite true, but in the early days, you used to sit up and go, gee, I wonder what the market's going to do. Can I get on this? Can I get in on this? Is this going to be a game changer? It's going to be a new trend, or it's going to reverse this trend? And it's just gone poof, hasn't it, really? In my opinion, anyway, for the last couple of years, if not 3 or 5. What happened?
It has, Geoff. Hey, so hi, everybody, and welcome to another episode of Are we trying to talk wader, or have we rebranded, Geoff?
Well, we have indeed. Sunday market update, I think we call it.
Sunday market update. Guys, I'm going to start with this, right? Everybody knows the unemployment figures. We all know that they were, well, let's just go with rubbish overall. Okay, non-farms was rubbish. Yeah, the unemployment rate came down, but non-farms are rubbish, right? Look, one thing I want to focus on, and you can pick this up on the web pretty much any way you want. This is the Citigroup Economic Surprise Index. So what does this mean? Well, there's a big black line in the middle of this. Let's be just say this big black line just here. That is 0. That means that the economists are getting it absolutely spot on, and there is nothing to see or say. When it is above the line, the economy is doing better, and it's surprising the economists in terms of its performance. When it is doing worse, as it is at the moment, then the economy is underperforming what the economists thought it was going to do. Now, there's many, many, many reasons for all of these things taking place. We all get that, right? But, and here's the but to all of this, right? What does it mean for us as traders? Well, one of the things that I think is important is that for the first time for quite some while, and I'm talking months and months and months here, we now have the global economic surprise index also being negative as well too, because the one on your screen here is just for the USA. So now not only do you have the USA trading poorly, you also have the global trading poorly against what the economists thought. Now you could argue, Julian, you would say to me, which is quite right, well, that's all COVID, isn't it? Maybe some of it is. But when you look at what's happening in China at the moment with some of their larger indebted companies that are looking like they're getting into trouble, when you look at the recovery that never happened in China, yeah, they bounced back, but then they stalled again. When you look at what's going on in Europe, they're doing better and they've got slightly better inflation, slightly better growth, but nobody's knocking it out the park there. You can quite easily construct a view which says that actually, I'm not sure it's doing as well as we think. And so that's really what's coming out here. Now, what impact does that have? Well, when economic figures start to perform poorly at some point in time, that will catch up with the individual companies which make up the stock market. So at some point in time, the micro will catch up with the macro. Now, what we don't know is whether the economic performance is a result of COVID or supply chain problems or this or that or 100 other things, right? But as soon as the companies start to report that they're struggling now and they're not doing as well as they thought they were going to do, then that's when earnings start to fall and you get into a trap on the equity market valuations. Because don't forget, equity market valuations, as we know, are a little stretched at the moment. And you could call them crazy or you could call them stretched, you call them whatever you want. But the reason why the market's been going up is because earnings have been going up around the world. In order to keep that ball rolling, we need to continue to have earnings to grow. Well, is that likely to take place? The economic surprise index is saying no. Okay, that's enough about economics. Now, let me put up some other stuff. I want to show you this. Okay, we've been talking about gold. Now, hopefully I'm not going to steal any of Ainslie's thunder when she comes on later. She normally tends to look at this a little bit more short term than I do. But I think for me, there's been starting to happen. For those of you who can see my cursor, this is the weekly chart of gold. Look at this support level here down at 1700 that we didn't break. Now the market is rally back. So the buy signal, if you like, there's a ring low formation for those of you who have done your homework, you know, on the weekly chart here. But equally, when we go look at a daily and you see the market trade above this level here, which is the low day, that's normally quite a bullish sign, right? It can be a sign of a reversal bar in this situation. So then you go, well, let's look at the overall picture here. And we'll go look at a monthly and we'll say, well, what does a monthly do to this chart pattern? Well, the monthly is still looking fairly positive. We've had the move since 2018 all the way up. We then had a ABC you can see in there, but we've had a retracement. And look at that month. I haven't seen a month like that for a very, very, very long time. Unless we take out this month's low, I am saying that gold is trading very well and should probably continue to trade higher. What other things do we have in our toolbox to help us out with that? Well, we can look at the cycles. There's some short-term, and you can see them here. Short-term cycles, medium-term cycles. Okay, look at the coincidence of both of them around this time. Also, remember that this time around here, okay, as we roll up into the end of this short-term up cycle, which hits at about the 24th of September, it starts to roll over. This is the seasonally bullish time for gold. But you've also got a longer term cycle that's bullish here as well too. So lots of reasons to be positive on gold. Hopefully I'm not stealing any of Ainslie's thunder, but I just wanted to point that out. We've been talking about gold now for the last 2 or 3 weeks. I'm just saying, let's continue to think about it, okay? What else, what other things do we need to look at the moment? This is right on my radar screen as well. For those of you that follow economics, you would know that the Australian dollar, when the commodity prices do very well, does normally very well. So what's been going on? Why has the Aussie dollar been falling? Well, there's the mystery. I think we can probably assume it's something to do with a small virus bug that's been affecting Australia. So as Australia has been hit by COVID, and I think this week they actually announced that it's got away from them and they can't go for an elimination strategy anymore. That's actually helped the Aussie. Why has it helped the Aussie? Because I think it means the economy is going to get back together again. So what does that do? Well, here's the thing, right? When you look at the Aussie, it's been trading quite poorly for some time, right? Not necessarily just due to COVID. Since pretty much March, it has been on a bit of a down leg, right? Then we can recognize this pattern because we've just seen it in gold. Now you've seen the market trade above the 73.70 area. We're into sort of, has the trend now ended and we're now going bullish? Well, here's the other thing to add into this from a fundamental. The Aussie trade surplus is enormous. Why is it enormous? Because they're not importing much because of COVID. It's just the basics. And what they're exporting right now is very expensive raw materials. So quite understandably, they have a huge balance of payment surplus, usually more than they usually have. That would normally put the Aussie dollar up somewhere near parity with the US dollar. Well, so here's the interesting thing. Why is it sitting in the 70s still? The answer is, don't know. But what we can do is we can look at this. You know those cycles I was just thinking about? Look at these cycles and where they're going. We're overdue for a pop on the cycle, right? You can see it up and then down, up and then down, and now maybe we're starting the next up. So if you think about it from a cycle perspective, you think about it from a fundamental perspective, and now you've got the technical chart pattern calling it as well too. Where are we wrong? Where we are wrong if we take out this low down here. Is it a risk worth taking because it's almost 2.5 big figures? Well, that's crazy, you say to me, Julian, I don't do 2.5 big figures. I need much smaller than that. So don't then take a small amount of risk. Get into the dailies. What are the dailies saying to us? Right, let's look at the dailies and say, where are we wrong on the dailies? Well, we have to wait for some kind of retracement because at the moment we're like 8 or 9 days straight up. So if you're a daily trader, you've got to wait. I think the trend here we can see, look, big move down, blew out all the stops, next move back up again, back inside the trading range, blew out the top of it. There's lots of bullish signals here. So wait for your first retracement on the dailies and then trade off the dailies. If you're a longer term investor, look at the weekly charts. You've got a 2 big figure stop, but if this thing works out, it's going to 85, which is 12 away, right? 12 cents away, miles. This is a 6 or 7 bagger if it goes where we think it might end up going. We need much more supporting evidence to get there, but just hold that thought in your head. I'm not as bullish on the European currencies, anywhere near as bullish on the European currencies as I sit now with the Australian and the Kiwi dollar. So these are the things I'm thinking about at the moment and the areas I'm looking at. Hopefully that gives you a flavor with that fundamental bias and maybe a little bit of cyclical bias to have a think about what's going on. I'm sure the guys will maybe help out with the shorter term view, but this is where I see the longer term pattern. Geoff, back to you.
Cheers, Julian. One question. I always ask you one question. Aussie Kiwi, struggling to get above recent highs, I'll put it that way, off a retracement. What's your forecast? So look, super long term for me. The Kiwi sells protein and the Australian dollar sells raw materials. Protein will always win out in a growing middle class around the world. So the short answer to this, Geoff, for me is that in the very long term, I see the Aussie and the Kiwi trading at parity. However, that's a super long-term view that is based on a sort of, if you like, some fundamentals that could take years to unfold. In the meantime, what are we actually doing? Well, let's go look at the monthly charts to try and get a feel for it. The short answer is not a lot. I'm trying to get excited here, Geoff, but I just can't. I understand the last 2 months have been pretty negative for the Aussie and positive for the Kiwi, and that's why we're heading down towards the low 103s, 104s at the moment. Traditionally, it seems to sit at about 110 is the midpoint, or 108 to 109 is the midpoint of all of this, right? Vaguely looking at that, maybe a little lower, I'm not sure. 107, call it as the midpoint. Right, so at the bottom end of the range, has it spiked to give me the idea it's going to trade up? No, it hasn't. Is it still trading down on the monthly charts? Yeah, I don't think I'd be looking to do anything at the moment because you've had 2 months down where it's closed in the bottom 5%, 10% of the range both months. And all that we've done this month is retrace up 50%, and we've maybe got a little bit more room to go, but it's not exactly bullish. This just seems to be a retracement on the monthlies to me. So the short answer for me is I'm not sure where this is going. In the long term, I expect this to break out to the downside and go down to 95 cents at least. And then it'll have a moment. It'll have a moment and everybody will go, that's completely mad. And then you'll see it bounce back to the 110 again, and then it'll go into some kind of cycle again, right? But parity in 110 seems to be the best range, I would say.
Honestly, if you looked at this and you asked me what I'd be doing right now from a trading perspective, I'd be selling options at either end of the trading range and just trying to collect premium as I would have done for the last the last 5, 6, 7 years. You could have been one of the most profitable traders in Asia if you just sat there with that options trading strategy. So I hope that helps, Geoff. I hope that helps everybody understand this. This hasn't been going very far, and maybe it's time for a turn, but I think still unbelievably we're heading down, which I'm with trepidation. I'm saying it. I don't understand why.
It's like a great range trade to me when it gets there. Anyway, thanks, mate. Much appreciated. Enjoy the rest of what's left of Sunday. Father's Day. I forgot to wish you happy Father's Day, mate.
Thank you. Well, I'm back at you, mate, and it's one of those special times, and it's a shame that you maybe had a little bit more freedom than us. We're in the middle of lockdown, a level 4 lockdown, which means I can talk to my children. I can't talk to anybody else, and I can't really leave the house. So it's been a very, very quiet Father's Day, but my kids made me a beautiful dinner today with my steak, I hasten to add, my steak and my wine. But they made me a beautiful dinner today, so the thought was lovely. But they didn't help me dig the holes I've got to dig in my garden to put my fence posts in. So I was still doing that this morning. So much of Father's Day help that you'd expect from the children. Anyway, it was a lovely experience, and it was great fun having the whole family together. So thank you, and to anybody who's got fathers out there, if you're part of this, then I hope that you've had an amazing day as well too. It's one of my favourite days of the year.
Was it 9-score Black Angus or?
It's a really good question. It was, I mean, seriously, it was an amazing piece of meat. I think I got it off a butcher. It actually came out the freezer, so it's unusual to get it so nicely out when you defrost it. But we actually froze it really, really quickly when we got it off the animal, off the carcass. It came very quickly from the house, from the butchering house. I don't know what they call them these days. Anyway, so we managed to get it. It was amazing, I have to say. And my son didn't even have to marinate it either. He was talking about marinating it 2 days ago. But again, that's, for a 21-year-old, that's a little bit of forethought that sometimes is beyond them. But
you can't marinate a good cut anyway. Good cuts.
Beautiful nonetheless.
Pure. Absolutely. Mate, I better let you go, and we better talk some more trading, I suppose. Much appreciated. Cool. See you later.
No worries. Thanks, guys. Thanks, everybody.
Okay, let's switch to Singapore and some fundamentals coming out of there. Well, not really the fundamentals coming out of Singapore, but the analysis of those fundamentals is certainly doing that. It's a very, very good evening to Alexis. Hi, Alexi. How you doing?
Hi, Geoff. Good evening, everybody. Glad to be here.
What's going on?
Well, I think it's really cool to go after Julian, because then I get to, I think, a little bit
all
of
the girls say that's really cool to go after Julian.
Sort of. As long as his wife is not listening in, right?
She's a good sport.
Yeah, all right. Yeah, because I actually was looking at the Aussie dollar for today's session. And I think for the past couple of weeks prior, I think we were looking at Aussie weakness. And for the last week or so, the Australian dollar has popped back up. So, of course, the question as a trader would be, is there more upward movement to go? And can I take advantage of this Australian dollar move? Will it continue going up? So that was the topic I was trying to explore to kind of figure out where the Aussie dollar is going in that sense. So I'm just going to flash a couple of statistics and a couple of news headers. So what I do like about this was there was this article by the Australian government where there's a new record for South Australian exports, and it has hit 13 billion for the first time in the state's history, right? So this, of course, brought me to think about, is it a import-export situation which has given Australia the buffer it needs? So what I did was I kind of went to look, what are the world's biggest exporting countries, just to see where Australia is placed. So it kind of surprised me that Singapore is number 13. So I did kind of check what is Singapore exporting and its machinery and stuff. Not very exciting. But Australia, it's somewhere at number 24. Not too bad, but I think it's like almost top 20. So again, the question is, what is Australia exporting that is allowing its current account surplus that is holding up the Australian economy? So if we think about it on the bigger picture, I think what is happening is because no one is traveling, right? And I figured that because if no one is traveling, and what's the best way to get stuff from other countries, right? It's of course by ordering it online, import export. So of course the biggest exporter we have is China. And how is China doing? China, of course, is a top exporter. Its exports are growing. It's in a way, the statistics for China, despite the COVID figures, is actually pretty healthy and pretty cool. So what I am looking at also, because there is a correlation between the Chinese economy as well as the Australian economy due to its economic relations. So of course that will bring me to take a peek at China's statistics, right? And they did have a drop in their GDP the last couple of quarters from like a 10% down to a a average of a 3, 0.4, 1.3. But if we look at it on a, let's say, 25-year scale, you can actually see that the GDP, quarterly GDP for China is almost close to where they were pre-COVID. So this big spikes was during that COVID period. So China has handled its COVID situation, be it, I think every country has its own uptake of COVID numbers. So the question is, in terms of economic growth, economic sustainability, what is China doing? And you can see that if you just look at the past 25 years or even 10 years, just get a cleaner line, China is almost to its norm, right? Which means it's about quarterly is about 0.1 to 0.2%. That it's almost back to normal. So if you see China quarterly is 1.3, if we go in and just kind of look at where it was since June 2018 to now, you can see it's about back to normal, which can actually mean a good thing in terms of Asian economy, right? Which means despite nobody traveling, despite tourism being frozen, some products and services are still getting exported, or at least China's domestic demand is still hefty enough to support its local growth, local economy, and anything else is supplemented from imports/exports, whatever. So if we look at a comparison again in terms of its correlation between the Australian and the renminbi, this is what I'm curious is, who leads the market? Is it the renminbi leading the Australian market? You know, if the Chinese economy as a whole, gain in strength and does import from Australia, etc. Does it which moves first? Is it the Australian dollar moves first or China renminbi moves first? And of course, I'm just going to assume China moves first because it's so much bigger. All right. Basically, economy-wise, it's so much bigger. So I'm going to assume that being a bigger economy means that a smaller economy like Australia will probably react to China instead of the other way around. So if you look at the monthly chart I have now, and it's really interesting because I've kind of tried to line this up grid by grid. So you can see 2020 is somewhere here, 2021, 2022. So all I'm doing is I'm putting lines at the tops and bottoms just to see whether there's a correlation. And there kind of is in a way. I think I've covered this before, like 2018 when the Chinese renminbi is at a high, Australian dollar kind of hit a double top on a monthly. When 2020 we had a low, okay, I think everybody went low here, and over here when you see the Chinese renminbi started going up, the Aussies already started consolidating. Maybe there's a lag here, but what interests me is this last 3 months where the Chinese renminbi has gone nowhere. And coincidentally, last month into this month, you see this ring low forming. I think it's what Julian was pointing out, this ring low forming on the Aussie dollar. So then, of course, I always like to scale it to the weekly time frame just to see what advantages can we take next week. And I think what is really cool to see is we do already see some kind of recovery that's happening in China. We have a lower, first higher low over here. All right, whether or not this coming week will be a continuation pattern, I'm not sure. But what it looks like is the renminbi is trending towards the upside. There is a potential of more upward space, right? There's more upward movement happening over here. All right, and over here, all right, we do have a bullish pattern that is forming. So what I will be looking forward to next week is looking for pullbacks for the Australian dollar and seeing whether we can take advantage of any potential long movements. Again, this is a combination of a little bit of fundamentals and always, of course, looking for the entries on the technical side. So my focus for the next week is the Aussie dollar. I am looking for potential pullbacks across the Aussie currencies because let me just go back to a single chart view. Okay, so okay, it's loading. All right, so if I'm going back to look at a single chart view, what I'm looking back is a lot of, the Aussie dollar has gone up really strongly last week. I am looking for potential pullbacks across the Aussie dollars and seeing whether we can continue the long direction with a medium-term bias to the long side. So that's all for me this week. We are going to have eyes on the Aussie next week. So eyes on you, Geoff. Over to you.
Cheers, Lexi. I think the RBA on Tuesday may have something to say about what the chart's doing. Well, not intentionally, of course, but if we do get that pullback on the Aussie, I think you're pretty much in the right ballpark. I think it's a buy if we do get that pullback. We'll see. But can it take all the weight of every single person in the room so far is saying Aussie long? We'll see. Thanks, mate.
Thank you.
Okie dokie. Let's see if that features in the commitment of traders and also the seasonals. Let's talk to Ash in Brighton, near London. G'day, mate.
Hello, mate. How are you? How are you?
Top of the world, mate. Top of the
Of
world.
course you are. Always top of the world. Yeah, do you
Well,
know, mate,
if you stand on your head, if you're in the Northern Hemisphere, we're on the top of the world, yes.
it is amazing here today. I can't see what I've got up there. Oh, there we go. Yeah, it's amazing here today. We've actually got some sunshine, and everybody's at the beach. Everybody's at the beach waiting for me. So I'm going to do this, and then I'm going to get down there.
Masks on, of course.
What's that? Sorry, buddy?
Masks on, of course.
No, but do you know what? I mean, I'm surprised actually about the lack of adoption of the mask. As soon as people were allowed to take them off, everybody took them off. Yeah. I went to see my buddies last week on this farm in the lakes, and on the way up, it's a 5 to 6 hour journey. So you end up stopping at the service stations, and I think I was the only one, maybe another 2 or 3 people in the service station wearing a mask. Nobody had them on. So it's not really a great surprise that we're getting the numbers that we are. But as Julian was saying, you know, countries are now starting to accept that this is going to be the state.
Yeah,
so it means that we start treating the economies as being two robbers. Yeah, maybe I was one of them. We start treating the economies.
You've seen the price of petrol, right? I think I can understand that.
Oh yeah, it's gone crazy, mate. But we can start looking at the fundamentals and just focus on that in a way, rather than worrying about what's going on with COVID at this particular stage. You know, things may change again, but we'll see what happens. I'm also going to focus on the Aussie, and I'm going to focus on gold. I think they're both really interesting markets right now. And in a way, slightly conflicting. It almost depends on which of these that you put the most weight on. Now, if I was ordering the most important data that I look at, fundamentals would come out on top. And then I start coming down to see between cotton seasonals, it's almost a close run thing, depending on how good the fundamentals are. You know, if the fundamentals were relatively flat, then I'd probably want to see much more in the way of COT data. If the fundamentals are really strong, then I'll probably be sort of okay to look at more at the seasonals rather than the COT data, as long as the COT data wasn't really negative. And what's going on with the Aussie is almost exactly that. You and I have both really liked the Australian dollar for quite some time. And the situation with COVID has really put a spanner in the works. But I think Alexis has touched on it, Julian has touched on it, that the economy over there is pretty well placed when we compare it to to some of the other majors, pretty well placed to accumulate in value. And I really like Julian's analysis on the Aussie versus the dollar price, swings at the minute, and where the Aussie sits in against the dollar. Numbers from the United States, as we know, were not conducive to a taper. Now, the taper, just so everybody understands the language, is when the Fed would start to purchase less of the government debt. And that puts less liquidity, money, into the market, which means that the supply of the dollars goes down, and we would tend to see the dollar rally off that. Now, those numbers, the unemployment numbers, would suggest that that situation is unlikely to happen, which would put pressure on the dollar, which may well drive it down. And then we're looking for a pair to trade it against. And this is where I like the Australian dollar, and I like I like gold. Because we'll come to gold in a moment. Let's have a look at the Australian dollar and what COT data is telling us. And it's very, very positive. 36-month is the most significant here. So the 36-month, the 3-year, 90%, anything over 80% suggests that those commercial traders are starting to accumulate at a relatively aggressive pace and looking out for the longer term. 18-month is at 100% and the 6-month is at 100%. If we look at the seasonals, we get a slightly different view, where in September, around about the middle of September, both the weighted average and the simple average, if you like, the accumulated average over from 1988, so 1988, does tend to be down. So this would suggest that around about the end of September, beginning of October would be the sweet spot to buy the Australian dollar. Now, buying in at this particular point with the fundamentals that are looking the way they are looking, you may well get chopped around. You may well, if you're buying over a longer period of time, so looking more on a weekly chart to trade rather than a 4 or a 1 hour chart, you might well be okay. So you might need to adjust your approach to buying the Australian dollar, because as I say, the Australian dollar appears to be a pretty good, a good place to put our money right now. If you're looking at the shorter term timeframes, then it looks in accordance to seasonality that you might be better off waiting just a little bit longer, just maybe a week or two longer before we start to get everything lining up. COT data looks very bullish. Fundamentals are starting to look pretty good. If they are accepting that the COVID situation will just play out on its own without having to continue to lock down, Australian dollar looks good. So you might want to wait for that if you're a short-term trader. Otherwise, looking now, I think, as Julian always says, if you believe it's going 10 times higher over the course of the next year, what does it matter what price you get in at today? So that's going to be a personal preference. Now, when we look at gold, gold is very interesting as well, because with gold, the COT data is not suggesting huge buying. 35% of the commercials are looking at looking at gold in the longer term. 70% when it comes down to the year and a half. 18% when it comes down to the 6 months. So actually, 18% below 20%. Actually a little bit bearish. So the COT data is not lining up with a gold rally. However, if we look at gold on the seasonals, completely different picture. The seasonals suggest a really strong period right the way through to around about the middle of October. Now, thinking about the fundamentals of this, if we accept that one of the reasons to buy gold is a hedge against inflation, a hedge against prices going higher, and we see inflation in the United States north of 5% and no taper, no controlling the money supply, that means that the US dollar's buying power is losing pressure, is losing value. And that would certainly point towards gold being a decent hedge now against inflation. So as the story stands today, gold to me looks like a decent trading or investment opportunity. Until the picture changes, specifically with those employment numbers, I don't think the Fed are moving, and I think that given the character of Jerome Powell, he's certainly a patient guy when it comes down to the right numbers coming in. Certainly has been historically that way. He does occasionally give us a bit of a curveball, but it's not suggesting that. So just to summarize, Aussie looks good, gold looks good. Most specifically, probably, is the dollar looks a little bit flat to weak because of some of the suggestion that we had the pump. The pump really happened because taper was on the table. Now those numbers aren't really supportive of that. We might start to see the dollar ease back a bit. And in my opinion, Australian dollar and gold look like a pretty decent place to trade that against.
Awesome, buddy. Thank you for that. We'll catch up tomorrow, right? In Trading Buddies.
We certainly will, mate.
At what time?
5 to 8.
Don't be late, right?
Exactly.
Thanks, mate. Really appreciate it. Sounds like a great segue into, of course, the Golden Girl, who sits yet in lockdown, I'm afraid. And how's she coping? Laughing, of course.
I'm laughing. I got to laugh, Geoff. You can't do anything else.
Yeah, the alternative's not that good an idea, I guess.
Oh, look, it's not been pleasant, and the numbers are still not great, and we are doing what we need to do, which is hanging in there.
Yep.
Because
how do we approach the week ahead?
So we go back to the charts. Gosh, let's have a look at gold. I'm going to just grab that off Ash. Thank you, Ash. And we're running, hot and running. Look at gold. Thank you for a very bad numbers report. Isn't it sad that I actually I I'm happy when I get a bad numbers report, because we had this beautiful push up on gold as the US dollar took a nosedive. So Friday night, bad jobs report. And look, we've had one of those weeks again where if you look at the last 3 weeks over here on my 4-hourly chart, and we knew when we're coming back up into this level that we were going to hit a lot of resistance coming up, back up through. I didn't think it was going to go, I didn't feel gold was going to go back down at this moment, despite the seasonality and the light on emphasis on the Dolly Cott data. But having said that, we haven't also done a fabulous job at all keeping to seasonality. And that's the thing with seasonality. And as much as I love it, and I always refer to it as much as I can, it's a bias, and it doesn't always pan out the way we'd like it to. So just always keep it in back of your mind when you are trading. It's not an entry signal. Having said that, the bad, and one of the reasons we've got to be careful with trading around the news, if it was a really strong number, and I think the number that was forecast for NFPs was 735,000, and it came in at 200 and something, so completely missed the mark yet again. And that was on adjusted numbers for the previous month as well. So the other month it was over 1,000, and then it came back down, and it's it was over 1 million. And it came back the adjusted number, and now it's come right back down again to 200,000. But look at the price action that we've had all week. It was like watching paint dry, a bit like the week before. And a bit like the week before that as well. So we've had 3 weeks of very drawn out. It's not moving. We don't have the momentum. We don't have the strong upside. And I think what you're seeing in the COT data, what you're seeing in the price action is reflected in the COT data. So the price action is first. That's what it's showing you. It's not that there's a huge amount there. It's just gradually grinding up. And for anybody who's following my Telegram group, I've been putting the levels of resistance in, and we expect it to be a hard grind up with plenty of headwind, and we're certainly going through it. So we came up and hit the up around the 1833, 1834 level, which was, as you can see, this level over here. And we're just at this level again. Now, will we have a bit of a pullback? We've got a golden cross technical side coming in. We've got a golden cross happening up on the daily. Always a good thing when you've got a fast moving average crossing over on top of a slower moving average. In this case, it's a 20 EMA crossing over a 50 EMA. That is a golden cross, which is an indicative long signal. The other things that everybody else has touched on the fundamental side is the COT data. Whilst not strong, the seasonal data is strong, but with a caveat in that, in the month of September, there's a bit of a turbo week where we do see a bit of a strong move. What actually triggers that, I'm not too sure. That it's just always around the middle of September that you see a bit of a pullback and then a very strong move up in September. Whether that will happen this year, I can't tell you. I've just given up trying to give really good ideas. We're just taking it one day at a time. The Aussie dollar, the commodity currencies that are going with it, one of the things that is really interesting, I was reading earlier this week, is that last quarter and $55 billion profit in the mining industry for the Aussie dollar. Part of that was gold. So we've got a really strong gold industry happening here in Australia, which obviously is now being seen in not only just gold spot, but also in the Australian dollar. Obviously, it's not in isolation. We've got coal, iron ore, I'll just trip over my tongue. Coal, iron ore, oil, gold, some of our top exports anyway. So when you put all that into the pot, sorry, Geoff?
Foster's.
I think Aussies are renowned for drinking the profits anyway on that. But yeah, that aside, that's always a good one as well. I was talking specifically resources, but that aside, but you see how that is all starting to all tip into a melting pot of, hey, this is not a bad thing to be jumping in on. As you can see, we had the move, close of trade. Obviously, there was a bit of a pullback as it came into this strong resistance area. I would imagine we might have a bit more of a pullback on Monday before we have a bit of a hopeful push up again. Next levels are up around we've got to get through this 1835 area, 1830, 1835, and obviously the next one will be up around that 1860, which is where my cursor is just at the moment, just up around here. So that's what we're looking for. That's what I'm looking for, actually, coming into next week.
Cheers, Ainsley. Much appreciated. That's the glittering gold. We'll be back with Ainsley very shortly with the black version of that, the liquid stuff called OIL. In the meantime, let's go and see what the crypto world holds for us for the coming week. G'day, Shukri. How you doing, mate?
It's a sunny time, and today's presentation is called A Tale of Two Aussies. Okay,
who?
And we don't name names here.
Ainsley and myself.
Because it's Father's Day. We don't name names today. Father's Day. You got to respect the dads, okay? So what's happening to Bitcoin, guys? It is again testing 50. If it breaks this, 55 to 60, right? That's cool. This is really starting to be a fall. Okay, you guys in Aussie call it autumn, right? But I know in the Americans, they call it the fall. It's called the D5 fall, not falling down. Fall means autumn, okay? Autumn, okay, autumn, or whatever you call it there. Ethereum is going up again, going to challenge 4,000. All-time high is 4,400. So within a whisker there. Bitcoin is far away from it yet. But the story of the day is IDOs. Cardano is going to launch smart contracts on the 12th. It is up to you. Because here's the deal. So a lot of people are asking me, yeah, but in September, Bitcoin is bearish, right? But here's the deal. Yes, agree. But you know what? This year, for some reason, it does the opposite. Average January down, it went up. It went crazy up. Down, it goes up. Up, it goes down. When it's supposed to go up, it goes down. When it's supposed to go up, it goes down. So it's supposed to go up in August, but it's supposed to go down in August. It went up. You guys decide what December is supposed to go down. If it does the opposite, it's going to go down. And that's where we get to the story of two Aussies, okay? Here's the deal. You look at Scheiden. You look at Moon River here, okay? Now, the thing is this, you get your Kusama here, you lend it to them and you get it back, right? So here's the deal. If you put one Kusama here, someone from Singapore did this, the total return on investment is at 12.51 times because she bought Kusama at 300. Now, tale of Aussie number one. This Aussie, we don't name names, no names. Otherwise, he's going to have to buy a lot of beer for you guys. He got in at $135 and his ROI is only 28 times. He made 28 times because that $135 is now worth 3,700. Scheiden, another example. The Singapore person, sorry, Singapore, I'm just telling the truth, made about 9.25 times. But the Aussie, because he bought at 135, had he gone into this, would have made only 20 times the money. So you see that this is the story of Aussie number one. Sorry, Geoff, we don't name names here. We shall keep the name secret.
Yeah, you know that second bloke, he chose to skip Scheiden and went to another one. I heard.
We don't name names here. We don't name names. Now, this is the tale of the second Aussie. We will call him Aussie number two. Now, Aussie number two did this. You guys see, this is Moon River, right? So Moon River went up by 28 times, basically. Now, the Moon River parent is called Moonbeam, okay? Moonbeam. I think it would be safe to say, just using simple math, that once Moonbeam IDO is listed, Moonbeam can easily go to 50 times. This is fair. Plus, if we see a big run that I think we will see like 2017, Moonbeam can easily hit 100 times. Now, here's the deal. We have Aussie number two, put a meager $14, $14. This is not even money, Geoff. I don't know what this is. This Aussie then multiplied it to $1,500. If this great Aussie puts this into Moonbeam and it goes 50 times, guys, this Aussie will have 75,000 US dollars starting from 14. Geoff, I request you tell this to the Tasmanian authorities. He deserves to be a city named after him, okay? This is my request. We're not going to name names here because you guys are going to request him for too many beers. He's going to be inundated with too many beers. If it goes to 150,000, Ainslie, can you go see the New South Wales authorities? Because he took like 14 US to 150,000. If the cities are already there, I don't know. Just name a beach after this Aussie. So that is it. That is it, guys. The tale of the two Aussies.
Oh, those people, those lucky Aussies live in Australia. You know, that's north of me, Australia. You know that, don't you? I'm in Tasmania. It's a different world altogether. Thank you, buddy. We'll catch up with you soon.
Yeah, sure.
Much appreciated. Okay, normally at this time we would be looking to go to Ainslie again. So why don't we do that just for fun? And she'll be talking about oil this time.
Yeah, it's going to be short and sharp and to the point with oil at the moment because it's she's been all over the place. And yeah, we've gone full circle. At the beginning of the week, we were looking for a break above this level of this resistance level. We had some news out on inventories. Down she came, up she went, took off again, and then with non-farm payrolls, we're back to where we started. So we've had a really big roller coaster ride all week, Geoff, and it's nothing much to go on. Normally it's, I mean, if you really want to break it down, you can say we've broken through, we've bounced off the new monthly pivot, we've come up, we've got close to tweezer tops. Is it going to keep coming back down again? I don't know. We've had a hurricane over there in the Gulf of Mexico, which closed down a few things. We closed down the Colonial Pipeline, which is the largest pipeline in the US. Then we've had the scare with the Delta variant not opening up, and then we've had the non-farm payroll. So we've had quite a week, but completely directionless. Like I said, we started the week about here, and we've ended the week about here. And at the moment, I've got I need more information. I need things to settle down. We had a bit of a nice move up, and then it peters out. The momentum really lost traction at the end of last week. And this week, we're just muddling along. At least last week, we've muddled along. I need a bit more to go on, I'm afraid, Geoff. There's just, as soon as something comes out, something with a contrarian view comes out and it flies off, but drifts back down again. So we've got no traction at all on oil at the moment.
Well, there you go. Guess what you do when that happens?
You stay out. Yes,
that much.
Yeah. I mean, look at it. This is where we started. This is what we were looking for a break for. We got the break. Then it came a double top and then straight back down again, and we've come full circle. Had this
looks like a nice retest of that level, though, doesn't it?
Oh yeah, retest, but and we've sat right on the 20 EMA on the 4-hourly chart, but there's no direction. You know, we came down and retested not quite this level. I guess technically you can say we've got a higher low. I don't know. It's like I said, you can dissect why it's moved and what's changed direction, or whether that fundamental reason has held any longer than about 3 hours before it turns around and changes its mind and comes back down again. It's a bit crazy. So when it's like that, it's just best to stay right out of it, and just let things settle down a bit to get a bit of direction. So nothing there to go with. And you know, OPEC meetings aside, we got the OPEC meeting. It was pointless. They're doing what they said they were going to do. Big deal. Nothing. There we go.
There's a couple of letdowns last week, wasn't there? OPEC meetings and NFP, yeah.
NFP, if I was, because I was trading gold long, I'm okay with that. That's not a problem. But with oil, ugh, it just goes to lack of demand. And as soon as you've got that happening, it is just folding on itself as soon as it gets the whiff of some bad news. And that's hard to trade. That's really hard to trade on.
So it's the shiny stuff for the week ahead, not the black version.
No, and you can back that up with a Condol, one of the Condol, and I'm leaning Aussie dollar, obviously. So yeah, put that in your little kit and stir it along and see how you go. But I'd leave the black gold out of the equation for the time being.
Happy days. Thanks, mate.
Happy Father's Day to you and to the other fathers.
Matt?
Happy Father's Day. Hope you had a nice
Thank you very
day.
much. Yeah. I had a nice little chat with the Big Island today, and my son, who's probably not, well, he's only about 5Ks from you. I think he's in Surrey Hills.
Oh, no, that's less than 5K. I know exactly where my 5K is, actually.
Thought you might.
Yeah, no, it's a bit like that. And even though we are all Australian, it is carrying on something like we are all individual nations at the moment. So unfortunately, but
one day we'll look back on this and we'll say, no, we won't say that. We'll say,
no, we won't.
we'll say something. We'll swear probably.
Yeah, probably. And politicians really, look. Having said that, I really wouldn't want to be a politician at the moment.
True story. Listen, if I don't get out of here, we'll be running into the next show. Well, there's actually not a show, it's a meeting, but we better get out of here. Thanks, mate. We'll catch up with you during the week.
Bye.
Happy days. Well, surprise, surprise, we had a new high on the S&P this week. I'm sure you'll all be interested to know that. I wonder what Gordon thinks of the week ahead. Let's find out.
Hope you're having a great week. Gordon Scott, CMT here with how the markets ended up this past week. Just looking at how everything closed out Friday, the jobs market missed by a mile, but the market said, so what? They missed the report that came out from the U.S. Bureau of Labor Statistics was expecting, economists were surveyed and they expected 725,000 jobs to have been created in the last month. There were only 250,000, missing by 500,000. That is a colossal miss. And it came at a time when people thought, oh, okay, well, we're in recovery, right? What? No. So you would think that should be dropping down and closing lower, people pulling their money out of the markets, especially as the markets are up at all-time highs in the U.S. stock indexes. But they started buying. Buyers got in charge and they kept buying. So the big question is, what are they buying? What is it that everybody thought, well, bad news, who cares? We're going after it. Well, I think that part of it had to do with the fact that people said, well, okay, bad news is good news because that means the Fed won't raise interest rates and that sort of thing. So you could just imagine then that that's going to be what people got into. In fact, here's what they started buying. We see that gold was up, and so gold stocks, some of the gold stocks were up a bit. Uranium, not only yesterday, actually, uranium has been on a tear. That's CCJ, Cameco Corporation, and they have just been on a tear, except where they are right now, that to me, that kind of looks like a top. It's you probably can't see it from the video here, but it's, it goes up and then it comes back down and stops right there. I expect a bit of a pullback. We're going to watch that pullback though, because this could be a real opportunity. Not just CCJ, but a lot of the uranium stocks are looking like that. And Nvidia, specialty chips are looking. That's a nice bullish engulfing candle, getting ready to break out. So that's what they were buying in general. But I think this bears a closer look. See, a lot of people felt like, oh, it's gold, it's inflation. That's just people are worried about inflation because the Fed's going to print more money, and that means more money in the system, and that means more money going into stocks. But, we really didn't see, gold hasn't been acting like the traditional inflation. Inflation has been commodities and basic materials. That's where people start pounding their money into when they were worried about inflation. Didn't happen on Friday. I think it's just specifically the idea lower interest rates are going to be around for a while. Here is why I say that. If we look at this chart here, this is the 5-minute chart, just one day of all of the different major sectors in the US. I know it's kind of messy, but here, let me just point to what matters at it. This top one right here, see that line continues all the way up and gets right up to there. That is XLRE. That's the commercial real estate sector fund. Okay. Commercial real estate pulls away from everything else. You've got XLV, Y, and K. This is healthcare, consumer discretionary, technology. These things were doing all right, but they're kind of in a clump. And commercial real estate left it all behind. So I think that when the markets come back on Tuesday, Monday is a holiday in the US. So Tuesday, what are they going to do? I think it's the low rates continue play. Who benefits from low rates? Well, commercial real estate is going to benefit from that. And technology is going to benefit. So in the tech sector, you're looking at advanced micro devices and Apple. The tech sector constantly has to borrow money, and the lower they can get that rate, because they build things. They manufacture chips and phones or whatever, right, and computers, and so they have to borrow money to kind of get ahead of that. And they could use their cash, but when interest rates are so low, they actually make more money if they borrow it and borrow it at low rates. Well, low rates going to continue. Tech sector is going to win. AMD, Apple, those are the two that I think are most interesting plays right now. In the commercial real estate space, you look at the top 10, you got American Tower. That's the cell phone tower company. They look really good, really strong, but like Camco, they've had a big run. I think they're going to be pulling back. Probably the one to watch is CBRE Group. They own a lot of high rises and big commercial buildings. The small caps might also have some play. That's any of the stocks that are part of the Russell 2000. IWM is the ETF that tracks them. In all of these, what you're going to watch for is breakout stuff that went up and made a new high. It's kind of coming back down and is getting right about to that same level and getting ready to break again. That is going to be the entry signal to watch for in the coming week. Hope you have a good time trading it. Take care and trade well.
Thank you, Gordon. Great insights, as always, into what we can expect to see in the stock market over the next week or so. Wow, I'm going to start trading that stuff or investing in that stuff, one or the other. Look, I'm going to be really, really, really fast, guys, because I have, as always, talked too much and I don't have a lot to look at, to be fair. But the one thing that I am looking, or two things that I am looking at, really, or three things actually, my game changer bars for the week. And I'm starting with the one that I am not interested in trading right now anyway, and it is dollar yen. I tried to trade this short last week, or was it the week before? I can't remember now. It got me again. It gets me just about 2 out of 3 times, really. And I find it the hardest currency pair to actually get a hold of, or certainly to hang on to. I see, however, another lower or potential lower high here sitting at a resistance level. And of course, it's also at a horizontal resistance level, or very close there too. So I do see some downside here, and I have got that game changer bar. I won't be trading that per se, because it's got to break through this trend line, if you like, or trade line, as I call them. So I probably won't be looking to trade that straight away, but another little pullback here may get me interested. So I say may, because I hate trading dollar yen, but if it does give me something to trade, then I will be looking at a very, very small stake. The other game changer bar, and we spoke about Aussie Kiwi. I asked Julian this question, knowing that I'd be looking at Aussie Kiwi, and I wanted his opinion. And his opinion, of course, was that we should be sellers at the moment. I'm going to disagree with that on the first instant, because I do have a game changer bar in this one here on the weekly chart, but I've also got a very, very, very strong horizontal level, in my humble opinion. Yes, it's been broken. It's been broken 3 times. So far, we've got a failed attempt to break that level, which is what, 103.74 or thereabouts. To my mind, this is at the bottom of a range, and I do have the right bar to give the tick of approval on that in this what I used to call key reversal bars on the weekly chart, I now call game changer bars because everyone calls them key reversal bars, and I like to be a little bit different. Will I trade that bar per se? Look, I think I will, to be fair. It will depend, of course, on what gaps appear in the market tomorrow morning, but because we've got a red-bodied bar here, I think it's fairly reasonably, reasonably safe, I'll put it that way, to trade above that bar with your stop loss below that. Of course, that's a fairly long stretch in terms of a risk factor pip-wise. So if we don't get a pullback on the daily or the 4 hour or something like that off these pivots, which you can see are acting as strong resistance, if I don't get, well, I've already got a pullback, but if I don't get a setup there that I like in the shape of a higher low on the daily or even the 4 hour chart, then that's what I'll do. We'll rely on the weekly. But best case scenario here on a 4 hour chart would be to put in a false break. Daily pivot's probably going to sneak up here somewhere. That's going to create an issue because you don't really want to be trading into those pivots per se. So you want to get an entry maybe down here somewhere and then get profit at the pivot before you go nuts. We shall see how that pans out. Currently, the pivots are acting as very, very strong resistance. We'll see how that pans out. The only other one I want to have a look at is Kiwi Swissy. The Kiwi has been on a tear, as we've all discussed earlier on, but we've also already put in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 buyer bars on a daily chart, and we have hit a resistance level. Now, scalpers can probably have a bit of a picnic here trading this to the short side. I'm not a scalper, but what I will be looking for on the smaller time frames is maybe a double top, any kind of reversal situation here, and then a lower high to trade this back down to around about the 64.20 mark. I think that's the next, well, it's the retracement level that I feel is going to be in play. There's probably even a confluence in a trade line through here. May take a long time to get there, to be honest, if that's going to be the case. But I'm looking to trade the retracement of this. I'm not saying for 1 second that it's going to reverse because this is a massive breakout bar, but I do feel that we're going to get a bit of a retracement here. And if I can trade that retracement leg, I'd be happy so to do. Just need an entry there at some stage to trade that back. Don't get overexcited about that. It's not going to reverse, in my humble opinion. We're just trading a retracement and that's all. But there's 100 odd pips there available if we can get it right. Okay, as I said, as usual, I've spoken too much and I've asked too many questions of the traders in the room tonight, all of whom I thank very, very much. And we look forward to doing exactly the same again next week. Have fun, guys, throughout the week. And we look like doing it again in the very same fashion next week. Have a good one. Bye-bye for now.